Hello all and welcome back. I hope you're all doing really well. Thank you yet again for the love and support on the most recent video. I seriously appreciate it. If you aren't subscribed to this YouTube channel though, as many of you are not, make sure that you are, as there'll be tons more crypto related content coming from me, particularly to do with HEDERA if you are interested in that. So stick around and make sure you've got that bell notification checked so you're notified of any future releases. Let's jump straight into this as there's a lot of different crypto news to digest again today. Crypto Fear and Greed Index, we're back at 19. This has risen quite drastically over the last 30 days or so. You can see there the historical figures. Last month, extreme fear of 10. Last week, extreme fear of 10. And then we're now sitting at 19. So we're slowly creeping back up towards the positive territory or the greed territory. Don't forget as well, over the last sort of month or so, we have seen the fear and greed index bottom out towards a 6, I think was the lowest figure that we saw, 5 or 6. It's a serious negative attitude at the moment towards riskier assets, something that we've talked about many times on the channel. Normally a great opportunity though to average into those positions. Interesting article here as well from Cointelegraph, backed up by data from Glassnode, which is the Bitcoin network is approaching a state where almost all speculative entities and market tourists have been completely purged from the asset. However, despite the most complete purge of tourists, Glassnode noted significant accumulation levels, stating that the balances of shrimps, those holding less than 1 Bitcoin, and whales, those with 1,000 to 5,000 Bitcoin, were increasing meaningfully. Shrimps in particular see the current Bitcoin prices as attractive and are accumulating at a rate of almost 60,500 Bitcoin a month, which Glassnode says is the most aggressive rate in history, equivalent to 0.32% of the Bitcoin supply per month. So if we digest what this is effectively saying, is that most of the speculators that didn't really believe in cryptocurrency or what the use cases are or the potential in the future have basically been liquidated or purged from the markets. And this goes back to that narrative I mentioned about conviction. They wouldn't have had the conviction to hold through what we've seen over the last 6 months or so, and would have been liquidated as a result. And what remains are the people that are avid believers in cryptocurrency and see a future for what these networks are trying to achieve. And that is where we're seeing a lot of the bullish accumulation take place. Now, what this could actually mean as well is that maybe Bitcoin has started to signal the bottom. We could see further pain to the downside, which I will cover a bit later on in the video at some sort of technical analysis from some different people over on Twitter. However, if it is just believers and people with conviction that are left in the markets at the moment, then we could see these prices begin to stabilize. Interesting tweet here as well from the HBAR Foundation. Obviously, a lot of you should now be aware about Lithos, so the first Web3 AAA game and entertainment studio, obviously choosing HEDERA as its exclusive DLT, but I wanted to focus on the last portion of this tweet. The AAA gaming studio is also a member of the HEDERA Governing Council, UBISOFT. So obviously talking about UBISOFT as well, and potentially they are building something on top of HEDERA itself, which could be very bullish indeed. We're seeing a lot of this movement towards interconnected in-game purchases, which then exist on chains like HEDERA and can be transacted in secondary markets. It adds additional utility to those in-game purchases rather than being siloed to that particular platform. Here's what I was talking about a second ago, lower highs all the time. Pumps, unfortunately, at the moment have low volume and they look corrective. Main target remains at the $16,000 level. So we can see here we had that sort of fake pump back towards the upside. Unfortunately, it was a lower high. We drew back down to around $19,000. We had another short pump back up towards $20,000. Sideways momentum again, and then we had another pump again where we were holding that $20,000 level, and we are kind of floating around that range at the moment. However, we could see us fall below $19,000, and then the next sort of main area of resistance would be $17,000 to $18,000, and then potentially as low as that confluence zone at the bottom, $15,000 to $16,000. As I said, I'm not too sure whether I care, to be honest, about where the price of Bitcoin tends to move. I just know the markets at the moment are in a pretty bad shape because of the macroeconomic environment, and that doesn't change the plan that I've had set out since the beginning of me investing. If we look at a flip side of some other sort of technical analysis, this is a chart pattern I've never seen before in my life. Projections of the fractal model of digressive circles apparently, and it's predicting that the early 2023 range would be $35,000. So we can see here we're in this bear phase. You go into like a neutral zone and then back up into a bull market, and then calls for $450,000 throughout early 2024, and then regressing back to 140K in 2025. The reason I'm showing this is the $35,000 level is a number that many sort of hedge fund analysts have called for Bitcoin to end the year at for 2022. So I believe it was JP Morgan, some analysts came forward and said they reckon Bitcoin could close the year around $30,000. This isn't too far away from it, and this is also a different technical indicator to what they would have used. So there's different points of confluence there to say the second half of 2022 could be much more positive than the first half. We can see this here as well, taking a macroeconomic perspective on this. Markets expect the Fed to taper QT, so to reduce the balance sheet by $2 trillion. This expectation is already priced in, i.e. many investors and institutions have priced in the fact the Fed is going to continue to sell assets to the market to pull or reduce the monetary supply. If the Fed decides to temporarily halt tapering and not to reduce balance sheets further because of emergencies, war, climate, inflationary pressure isn't as bad as they thought now, it's cooling, whatever it may be, then rates will drop and the stocks will begin to rise. Obviously a correlation between equities and the cryptocurrencies markets, and we could see a Bitcoin pump take place as a result of that. So still a heavily macro market at the moment. Regardless, I'm still buying into those positions as much as I possibly can, and hopefully you guys are too if that is part of your long-term strategy, something that I talk about a hell of a lot. Breaking news though, Visa has launched a no-limit Bitcoin card in the United Arab Emirates. Again, just goes to show the sheer level of adoption that we're beginning to see. You've got Visa, who is a payments processor, a traditional payment processor, who is now launching no-limit Bitcoin cards in UAE to facilitate transactions via the Bitcoin network, I guess, rather than Visa themselves. So really interesting there that we are seeing traditional payment systems get on board. You would have thought these would have been one of the last groups of companies to sort of engage with cryptocurrency at all, but they also see the future of cryptocurrency, money without borders, all this sort of stuff. First half performance in 2022, this is something similar to what I covered in the last video. And it looks at the relative performance of some of the biggest stocks in the world, so some of the biggest companies, and the drawdowns from the beginning of 2022 to the first half. So you've got Apple and Microsoft, Alphabet, Amazon down roughly 30%, Tesla, Zoom, Airbnb, Pinterest down under 50%, Nvidia, Uber, Meta 50 to 55%. You've got Bitcoin in the middle there at minus 60% from the beginning of 2022. And then we've got several other companies that have performed much worse. So PayPal, Etsy, Netflix, Snapchat, Ether, so I guess that's Ethereum, and Spotify and Coinbase all down greater than 60% over the first 6 months of 2022. So the majority of the cryptocurrency projects, the large cap ones anyway, aren't performing too badly, particularly when you compare them to the trillions that have been lost in the traditional financial markets. Some other news that's just come in is that CELCIUS Network has paid off another $64 million towards its Bitcoin loan. Their liquidation price has dropped further to $4,967, so just shy of $5,000. What this effectively means is the level of risk for the CELCIUS platform and its users' funds is decreased fairly dramatically. There is a stern likelihood that Bitcoin is not going to reach that $5,000 liquidation price for CELCIUS to be liquidated out of the markets. That is roughly another 75 to 80% drop from where it currently is. Bearing in mind, we've already dropped around 60% from the all-time high in this year. Of course, I'm not saying that it can't happen. This is cryptocurrency markets, and we're in a massive de-risk environment at the moment. However, it does seem fairly unlikely. So there could be a bit of respite here for some of those users that have funds locked up in the CELCIUS platform. The narrative still remains the same though. If you are holding cryptocurrency on a centralized exchange, it probably is well worth transferring it across to a non-custodial wallet or something backed up by a hardware wallet. Actually, while I'm talking about that, there was a fantastic comment from someone on one of my previous videos talking about the risk of some of the biggest centralized exchanges. And I do agree with his point, so just wanted to sort of reiterate it. Some of the largest exchanges, for example, Binance, have a very low risk of your account sort of being hacked or sort of frozen, etc., because they are quite they're safe exchanges. you actually have slightly greater risk if you transfer your funds across to a non-custodial wallet and then you lose your seed phrase or your private key. You're more likely to lose your funds that way because you haven't backed it up properly, or you interact with some sort of unsafe decentralized application or share the wrong piece of information. So regardless of what you end up doing, there's risk in both. Make sure you understand what you're doing. Plenty of videos on my channel talking about non-custodial wallets and how to transfer funds, for example, from Binance to Hashpack, etc., how to stay safe, and there's plenty of other stuff on YouTube. Make sure you guys are doing your research. The number one thing that you need to remember is to keep yourself safe in these markets. UK government is now seeking views on the taxation of crypto loans and staking in decentralized finance. So this will continue to play out over the coming months and years as we see more regulation enter the markets. Now, regulation itself is not necessarily a bad thing. In fact, it can help drive crypto adoption that much further. What we need to ensure, I guess, is the policies that do get set in stone by the different countries are sensible. The last thing we want to see is them to really stifle innovation via that. Just in as well, Chinese tech giant Tencent begins testing NFT avatars in its music app. So just wanted to quickly cover Tencent. Many of you may not have actually heard of Tencent before. Some of you might have. They are, I believe, still one of the world's top 10 biggest companies by market cap. And Tencent own a ton of different gaming franchises. So some of the biggest here are Funcom, they own 100%, Leiyu, based in Hong Kong, 100%, Riot Games, which is obviously the creator of League of Legends, one of the world's biggest esports games. They own 100% of that as well. And then plenty of others here as well. Epic Games, they own 40% of. Grind Gear Games in New Zealand, they own 80% of. Tons of different stuff. So them implementing NFTs inside a music app. And if that goes successfully, we could start to see them push this narrative with the boards that they sit on for these other large gaming franchises. And then we'll see NFTs roll out in there. So for example, League of Legends being a massive esports game, if they pushed Riot to start implementing NFTs as part of the in-game digital content, there could be a massive spur of adoption there, particularly because it has great big ties to esports and it commands one of the biggest viewer bases for esports across the globe. Bullish stuff regardless. Wanted to quickly run through this thread from the HEDERA Whale Club and them talking about how and why they decided to build their NFT project on HEDERA over other chains with much higher NFT trading volumes like Solana and Ethereum. First and foremost, of course, HEDERA uses a directed acyclic graph technology for its architecture, or DAG. It is a proof of stake network with staking first phase coming in July 14th, and some major improvements over conventional DLT technologies. HTS as well enables users to create and transact NFTs inexpensively and without the need for smart contracts. All fees are fixed in USD, so they are predictable for enterprise and retail users alike. The invention as well solves the blockchain trilemma, so security, scalability, and decentralization. And they briefly talk about what those three were. But all of this goes to say one thing: HEDERA is an awesome technology that is sucking away talent, capital, and users from Web2 and other Layer 1 technologies. The HEDERA NFT community is also extremely welcoming, friendly, and optimistic on the future of NFTs and crypto. We are proud to be building on HEDERA, and we hope to see HBAR and the entire NFT community flourishing. Plenty of other projects as well that are coming to HEDERA for NFT purposes. Obviously, I've covered several large ones on the channel before. Obviously, one of my personal favorites being Dead Pixels. We will see further drops in the future. We've seen historical amounts of volume on Zoo's marketplace, them obviously as well being a partner with the HBAR Foundation. And we will continue to see this trend grow, particularly if we do head back towards bull market territory. That is where we will see the excessive amount of investment in NFTs and slightly riskier assets like that. And I do believe HEDERA will be poised to capitalize on that the next time it comes around, primarily for all the reasons outlined in that thread. Anyway, guys, hopefully you enjoyed this video. Slightly shorter than the ones I've been doing recently. However, it's probably given you a bit of information about what's happening in the crypto markets at the moment. If it has, leave a like, drop a comment if you've got something to say. Plenty more content coming from me in the future. Until the next one, I'll catch you then. Cheers.